I'm Charlotte McLeod with investingnews.com, and here today with me is Byron King of Paradigm Press, formerly Agora Financial. He's a longtime newsletter writer and geologist who works closely with Jim Rickards. Thank you so much for being here. Always great to see you.
It's great to see you, Charlotte. Thank you. And everybody who's watching, thank you very much.
Well, excited to get into our conversation today. We're both back from the Rural Symposium in Florida quite recently, so I thought we could start there and hear about any key takeaways from the conference for you, interesting conversations that you had or themes that you noticed coming up.
Well, yes, thank you. I saw you down there. We talked a little bit. We just didn't have time to sit down and have this interview, but it's in a way, it's better that we're doing it now because we can look back with a little reflectivity on, what we saw, what we heard, people who we talked with. Takeaways are many. I mean, it was a great symposium, Rick Rule Symposium, and you can still go online and if you want, purchase the videos and stuff because they recorded everything and they'll keep it online till I think December 31st. Free plug for Rick and his symposium there. I know you were busy because I saw you talking with people, and that's why we never connected. You're busy doing your thing, and I was busy doing mine. And here we are. Okay, a couple of takeaways. First of all, I was struck, and I mentioned this just because it was one of the first things that I encountered when I was talking with people. That you've got explorers out there, and they're out there exploring. They're drilling holes and trying to find stuff. And then you got producers out there, and they're producing stuff, and they're producing, selling it. Great. You got developers in the middle, and they're busy spending money, but they're not generating any cash. They're buying concrete and steel and electrical equipment and machinery, and they're hiring people and trying to get their work done and all this kind of stuff. They're not generating any cash. Well, guess what? The people who are buying concrete and steel and machinery and electrical equipment and cable and wiring and all this kind of stuff, they're competing against everybody else in the whole rest of the economy. I mean, it seems obvious, but it was interesting to hear people talk about the inflation within the development sector, the development segment of the overall sector. So, explorers can always make your day with one or two great drill holes, and producers, they can make your day because they're producing and they're selling $4,000 gold with $1,200 costs, and they capture that middle. These other guys are spending a lot more money than they thought on development. So I'm not saying don't buy into developers, but I'm saying that's one thing to be worried about. Another thing is and this was prevailing in the conference, and you saw it, I saw it, you talked to other people about it, but it's just, what happened to the price of gold? What happened to the price of silver? Well, gold and silver are two different things. I mean, two different elements, et cetera. Gold was $5,500 an ounce in, the end of February, I guess, or January. And it's, 4,000, give or take change, today it dropped, almost 30%. What does that mean? Oh, it means we should just sell all our gold and leave it alone. And no. It would be like if you're in Vancouver. It would be like if we went to Canadian Tire. You went to the Canadian Tire store, and they have a whole bunch. They have everything there. You can buy paint, you can buy lumber, you can buy nails, you can buy dishwasher cleaning, you can buy cat litter, and you're pushing around the Canadian Tire store, and the loudspeaker comes on and says, "Everybody, pay attention, please. Everything in the store is 40% off right now. Just take whatever you want, go to the checkout counter, and whatever the number is, we'll bring it up. We'll knock 40% off the price." And everybody in the store kind of listens to that, and they instantly run out of the store. Why are you doing that? For me, you're going to give me 40%. I want to load the shopping cart up. Now, if you have cash, you don't spend it all in one place at the same time. But right now, the sector took a really big hit. Gold physical and gold mining and, the whole mining sector took a big hit. A lot of great companies are on, remarkable, sales right now. Doesn't mean you go out and you buy every share you can with every dollar you've got. You kind of play it out over time. But the sector is on sale. Same thing with the silver miners, but there's a whole different dynamic between gold and silver. I mean, the people who are buying big amounts of gold in the world are not, little coin collectors and, little onesie twosie investors, just kind of, I'll buy a coin here, I'll buy an ingot there or something like that. No, the people buying the big gold are the central banks, and they're not buying to trade it. They're buying for the long term. They're buying because they're de-dollarizing. They're buying because they see what's going on with the U.S. dollar, which, the Federal Reserve and the Treasury Department says, oh, inflation's like, 3.5%. Yeah, they're only off by about 200% on that. Okay. Inflation is more like, depending on what you buy and how you live, inflation is, 8, 10, 12%, let's just say inflation is 10%. Let's just say whatever, in terms of energy, food, rent, insurance costs, like all the stuff that, that people spend in a modern economy, things that you buy. The rule of 72, you divide 72 by that 10%. In 7 years, your purchasing power is going to drop in half. Okay. And now maybe you're really elderly and you're not going to be around here in 7 years, but maybe you're not. Maybe you're, in your high 70s or mid 70s or your 60s or your 50s. You had better be worried about 7 years from now. That had better be an investment horizon in terms of preserving your wealth over that time and, generating income along the way. And so, one of the takeaways from that Rick Rule conference is that, you got these out of favor, companies that have true value. I mean, it's gold in the ground, uranium in the ground, copper in the ground. I mean, this stuff isn't going anywhere. So, if you're looking for the long term, these are the bargain basement, kind of companies to be buying now. Could they go lower? Yeah, sure. Everything can go lower. But is it, is it time to run out of the store and not buy anything? No, So if you got cash and you have some ideas, this is the time to act on it. Those are two takeaways. The third, I'll just throw it out. I mean, copper is destined to do well. I mean, there's, we know where the copper deposits are, and we know what the rates of exploitation are amongst the copper producers, and there's just not enough. It takes, what's the number? It takes 20 years to build a copper mine, which means that if you want to have a copper mine in 2 or 3 or 4 years from now, you needed to have started like 16 years ago, and that didn't happen. Newsflash, didn't happen. So copper is destined to do well, and then we could get into energy or whatever. But yeah, so I don't want to. Let's go. Let's have another question and take it from there. Yeah.
Really good takeaways from the conference. I think those were definitely themes that I noticed and heard about as well. And we want to dig into some of them a little further. But before we move on from the Rural Symposium, I wonder if there were any companies that stood out to you on the show floor there that you're able to mention.
Oh, well, sure. I mean, if you weren't at the conference, you missed some terrific companies. I'm not trying to shame anybody into it, but I mean, Rick had a book and with all the names and everything. I think it was 70 exhibitors. It may have been more than that, but there were 70 exhibitors. And first of all, I'd say that just about every single one of them was good in their own way. I mean, one of Rick's criteria is that he would own them, or, he or his funds or whatever would own them, so if it's already a pre-screened group, I mean, and I don't want to say you throw darts at the book and just kind of wherever the dart lands, you buy that company, but it depends on who you are and what you're looking for. This is not personal financial advice. That's the lawyers talking there. A couple of companies that I thought were, just doing really great things. I mean, I like Contango, CTGO, Contango, which is Contango, I think it's called gold and silver. Now, it used to be just Contango ore, but it's Contango gold and silver. They work in Alaska, and they have a play because they merged with Dolly Varden in the Golden Triangle of British Columbia up in Northwest BC. They are a producer, so they've got cash flow. This is great. They've got a beautiful deposit that they mine, and they send the material up to the Kinross operation in Fort Knox. And, Kinross processes it. They take their cut. They write a check to Contango. So they got cash flow. That's great. Then they've got another sort of up and coming production that they're working on called Lucky Shot, and I happen to have some gold from nearby Lucky Shot. This is gold ore from placer deposits nearby Lucky Shot. This isn't from there. I got this. This is from a different locale, or different different site. But this is the kind of stuff that is coming out of the mountain into the streams that they're going to be mining at Lucky Shot. Really nice place. And then they've got the Johnson tract down in southwest of Anchorage, which is a beautiful. I've visited it last year. Beautiful, intrusive and just nickel, gold, silver, copper. Or not nickel, zinc, gold, silver. Getting my elements confused here. And then they've got the whole silver play that Dolly Varden had in Northwest. So there's one company. I mean, I think Contango's around, I don't know, $16 a share or something like that right about now. It used to be $30 a share. I mean, so it's down, by half. I mean, again, it's like you're in the Canadian Tire store and the loudspeaker says, "Hey, everything's half off." Oh, okay, yeah, I'm going to buy some. I'll buy twice as much paint, or I'll buy twice as many boxes of nails, or whatever. I'll buy twice as. This is how this is. And will it pop up in the next week or two or three? I don't know. I don't know what the stock market's going to do, but I do know that in a year or 2 years or 3 years, this is a good company getting better and better and better and better. And that's just one company out of 70. I'll throw another name out there for you. I love this Seabridge Gold, SA Seabridge. They have, again, in northern BC, they have this beautiful, gorgeous, unbelievably good ore deposit, massive porphyry, copper and gold. And they have been working on it for years. Rudy Frank is the CEO, and he likes to joke about how he's been, 27 years becoming, this overnight success. But I mean, they've done so much work on it, through exploration, early stage development. And as with all things in modern world, you get sued by this group and you get blocked by that group and blah 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 blah. But guess what? They power through it. They've built roads. They got power lines. In fact, they have power lines and they have power for the power lines. There's not enough electrons in northern BC to do everything that everybody wants to do. But guess what? They have a long-term deal with the BC Power Company. So again. You mentioned were a couple of names. There are. Let's see. I'll give you a South American named Lara, LARA Exploration, and I forget the symbol off the top of my head. So look it up. LARA Exploration. They have a beautiful, gorgeous copper deposit in northwestern Brazil or northeastern. I'm sorry, Brazil, and it's in a sort of a brownfield area. Lots of mining. We're not chopping down any rainforest. There's other mines nearby where they got roads, they got a railroad not too far away, they got power lines, everything you need to do this development, and a beautiful, beautiful copper deposit. So there's three names for you, Contango, Seabridge, Lara, and that's 3 out of 70. There's 67 other great, wonderful companies that were there, and superb people. Just people that when you get to know the management, when you get to know the geologists and the technical staff, which I've been fortunate over the years to meet many of these people, and them too. You've interviewed them, so they're solid. So that's a couple ideas out of the Rick Rule conference.
Well, thank you very much. I can add all of the ticker information in the video description if people would like to check it out. And you're right, this wasn't planned, but I have interviews on our channel with Contango and with Seabridge if people want to hear from the CEOs there as well. So I think very good. I want to go back and talk a little bit more about gold. So we mentioned right now, this is kind of bargain prices for gold. And I think people can understand that. But questions that I'm seeing come up is, well, okay, how do I know that it's not going to go even lower from here? Where is the bottom? And how long do I have to take advantage of this? What could be the catalyst that breaks gold out of this kind of range where it is right now? So I wonder if you have thoughts on that.
Oh, absolutely. I have some thoughts on that. How low can it go? I mean, I mentioned earlier, it's at 4,000 now. Could it go to 35? Yeah. If there's a crash in the stock market or something like that, yeah, sure. Absolutely. Because why would gold crash if there's a stock market crash? Well, I'll tell you why, because, while everybody's trying to sell all of their hype stocks and their vaporware stocks and everything, and some of these guys are going to go no bid on what it is they're trying to sell, other people elsewhere are going to sell what you sell what you can sell, not what you want to sell. And so something bad happens, and you get that margin call. You're the trader who went out on a limb or something, and you got to stroke a big check to the brokerage or they're going to cancel you out or something. What do you say? You're going to sell your gold. Okay, great. So gold, not great, but I mean, it's what you do. So gold goes from 4,000 to maybe lower. Okay. But guess what? For every seller, there's a buyer. Sometimes, many times, that buyers happen to be Chinese or somebody else who is, liquid. But the gold's moving from your weak hands to somebody else's strong hand, and so gold may go down in a market crash, but gold is among the first things to come back in a market recovery, or even during a market crash. In the 1930s, one of the few things that did well during the Great Depression were gold mining stocks. Homestake Mining is a classic example of a company that really did well for the shareholders over that 10-year period from 1929-30 to 1940, till the war started. Don't try to time it. Don't try to be perfect about it and say, oh, I'm going to wait until I can catch the absolute low. If you try to catch the absolute low, you're going to be very frustrated, and think long term. It's like what we were talking about earlier. If at 10% inflation, which is probably what it really is versus the 3.5%, what they're saying, you're going to lose half your purchasing power in 7 years or 8 years, and so here, this is a 5-ounce ingot of gold. It's the old Republic National Bank of New York. In the olden days, banks actually kept gold ingots, in the vault, because this was their money. This is what they proved. This item was minted probably in the 1910s or 20s. It's hard to say, but as best I can figure out, it's a slightly historical artifact, but really this is 5 ounces of gold at $4,000. Do the math. This is a lot of concentrated wealth right here. This is at least maybe a used car. I don't know, in my hand, but and then when I'm finished here, it goes back to the security vault. But I just brought it out here because I knew we were going to be talking today. But yeah, this is what 5 ounces of gold looks like, and it's what can I say? If you don't have physical in your inventory, it is time to get physical. I mean, the days of $1,200 gold, they're long gone. $2,200 gold, good luck. 35 maybe, but if you're just in the accumulating stage, you should be going physical for gold right now. Silver, it's a slightly different story, but again, silver is the poor man's gold. So anyhow, when people say, oh gee, how do I time it? How do I do it? You're in the right time right now, and it depends on who you are. Are you a trader who wants to trade in, trade out? Well, you don't trade in and trade out with real gold. You trade in and trade out with GLD or or with funds and ETF, GLDX or something similar to that. You trade that. This is the kind of stuff that you buy and you put it away, and you look at it like once a year. I pull it out once or a couple of times a year when I have like an interview. I bring it I get down to the vault and bring it out, just because don't leave this stuff laying around the house, obviously. So that's that's one way to approach it. And in terms of where do things go from here? Again, it's we're in this inflationary time, and what is the value of the dollar? It's not that gold is going up. What's an ounce of gold worth? An ounce of gold is worth an ounce of gold. It's that the dollar is going down. Before we got on the air, in the green room there, I showed you that this is a $20 gold piece from 1924. So it's 102 years old. $20. Okay, this is a $20 bill from now. This $20 gold piece is. Let's just use the amount of gold in there. The ounce of gold inside this $20 gold piece is worth $4,000. Do the math. 4,000 divided by 20 is 200. I need 200 of these things to buy one of these things, right? Now, here's another interesting item. This is a $20 gold certificate from 1922. In 1922, the U.S. government would issue these paper gold certificates. And it said, I won't, type in, the printing is really small and everything, but it says the Treasury of the United States of America will pay to the bearer upon demand the sum of $20. So this is a $20 bearer note, you might say. I could go to a bank, or I could go to a federal installation, and I could say, here's my piece of paper, give me one of these. And then, okay, and that was the exchange. But this is what $20 worth of paper looked like in 1922, and it was worth one of these. And this is what $20 worth of paper looks like today. You need 200 of these to do one of those. So long term, not that you're going to live to be 100, but if you live another 20 or 30 or 40 years, however old you are, just think in terms of what are you going to use to preserve your wealth over time. Now you don't put everything into gold, because you need other things. You invest in other things. You need money to live on, cash to walking around money, pay your bills, pay the mortgage, all that stuff. But these are things that a lot of people who are just coming into the gold sector do not understand. And I'll make another real quick point, because you have questions, and I don't want to be overwhelmed the answers here. But when you look at the big market, the trillions and trillions of dollars worth of wealth in the market out there, how much of that wealth is tied up in the precious metal sector? Like maybe 0.5%, maybe 0.5%, and that's among the people who you and I know. That's the people who are at the Rick Rule conference. That's many of your viewers out there. Thank you for viewing. But there might be people out there who are brand new to this. They're like, what's with this gold thing? What's with this Charlotte thing? Who's this Byron guy? And okay, hi, hello, I'm Byron. This is Charlotte. This is what we do. If you're new to this, half of 1% of the market is tied up in real assets like this, hard assets like gold or silver. What happens if, just work with me here, go with me, what happens if maybe that 0.5% becomes, 2.5%? If people say, I'm going to get rid of my tech stocks and my software stocks and my computer chip stocks and my SpaceX stocks and all this stuff, I'm going to take some of that money off the table. I'm going to put it in gold and silver. What happens then? Well, that if it goes to say 2.5%, that's a 5x right there, and that doesn't account for sort of the madness of crowds. The insanity when people start to see these kind of parabolic up moves, or I guess go like that. So it's better on the screen. And now when things go parabolic, you want to be careful there too, because when things go up really fast, they can come down. It's called in a correction, but on the way, so you buy your mining shares now, and then as they start to roll up, they're going to be taking care of you as life unfolds. But be sure to take some of that money back off the table too. So that's a lot of just sort of I'm trying to distill a lot of wisdom into a short amount of time. But there we are.
I appreciate it. So really, I guess the message for investors right now is those larger themes are more important than trying to parse through these day-to-day price actions and trying to find the next catalyst. That's kind of the idea.
Mm-hmm. Yeah. Well, when you say, what could drive the price of gold up? Well, every now and then maybe something happens that drives the price of gold. I mean, one thing that definitely would do it would be if the Federal Reserve came out this afternoon or tomorrow, whenever, and said, next week, and said, we're going to lower interest rates. Well, that'll spike the price of gold big time in a hurry. Will they do that? I don't know. I do think that this new guy, Mr. Warsh, Kevin Warsh, he's trying to, kind of be very, even keeled about it, very taciturn, not giving a lot of guidance and all that kind of stuff. Okay, that's better. I don't like the Fed to be this sort of shadow market mover thing, but everybody watches them. But I don't want to say he's a one-trick pony, but he's definitely a pony who knows one trick. And the one trick that he knows is that he wasn't going to be nominated to be the head of the Federal Reserve unless he at least was leaning towards the idea, Mr. Trump, Mr. President, I'll lower those rates for you a little, I'll get them down. Can't come out right out and say that, but I'll get them down. The guy has a job, and that's the job. And sooner or later, it's going to happen. Now, will they raise rates? They could raise rates too, but how do you deal with inflation? Well, you raise rates. Paul Volcker showed that, like 45 years ago. So, but again, we're talking about speculative things in the future. Right now, the sector's on sale, and there's a lot of great companies. When I say great companies, I mean great companies. They got wonderful assets. They got great management teams. They got super technical teams. They're out there doing things. They're drilling holes in the ground. They're finding gold. They're finding ore. I know that the viewers, they want some more names, don't they? I can tell. I can feel it. I can feel the vibe. They want some more names. Banyan Gold up in the Yukon. All they do is they're a machine. They just find more gold, more gold, more gold, more gold. They're at 8 million ounces now. I mean, holy smokes. I mean, and at the rate they're going, it's going to be a bigger number than that, Or look at a fairly new play. When I say a new play, it's a new company running an old mining district, Hemlo Mining. It's in the Lake Superior area, just kind of northeast of Thunder Bay. Jonathan Odd and Robert Quartermain, put this thing together. Hemlo was a Barrick gold mine, but it was a small part of Barrick's, portfolio. And Mark Bristow of Barrick, he is like, it's like 5% of what we do. I can't think about that. Let's get rid of it. So he calls up Bob Quartermain and says, Bob, you want to buy a gold mine? And Bob said, I'll call you back in about an hour. Don't do anything. Hang on. And so boom, 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 phone calls. They put together a package and they bought the Hemlo mine. Well, it's a producing mine. And, it's a producing mine, and they've got this huge fairway of gold exploration. So, and it's a Barrick mine. So it's beautifully built, great equipment. They got a really nice workforce up there that know what they're doing. So, there's like 2 more names for you. Banyan Gold, which is a really great advanced stage explorer. You might even call it early developer. And then Hemlo, which is a producer. They are producing gold, and they're going to produce more. So, there's plenty of opportunity out there for, people to get in.
Well, much appreciated. I think that's very helpful for everybody who's out there watching. And I always love to talk about gold, but I want to move over and talk about energy as well. We should probably bring up the Iran war. Back when we last talked, all the way back in March, it was just beginning. So I think it was hard to say anything for sure at that point. But you've written some interesting pieces on what's going on with the war. And one that I thought was really interesting was how a long-term impact is it going to be how it changes pipeline systems and tanker routes, that kind of thing. And maybe we see the Strait of Hormuz somewhat de-emphasized in the future. So I wonder what you would want investors to take away from that situation that's unfolding.
Oh, great question. Again, we'll have to leave the gold and the silver and all that. We'll leave that aside. I got my start as a geologist right out of school, working for the old Gulf Oil Company. It's now part of Chevron. And I worked in development and then exploration. And I found some oil for them. That's great. Yeah, good for you. Pat on the back for Byron. But I've been following the oil industry literally since I was in college, which was a long, long, long time ago. And then hang on here, show and tell. I'm knocking stuff around. This is my ceremonial drill bit from my first discovery. That my boss gave it to me. I guess it's a rotary drill bit, but I found a whole bunch of oil for Gulf out in West Texas, and they're very unexpected. But we drilled the prospect, and so anyhow, I know a little bit about oil. I've been following it for quite a long time. The Strait of Hormuz has turned into this, this battle zone, you might say. It's open, it's not open, it's partially open. You have to pay a toll. You can't pay a toll. If you go through, they shoot you. If they shoot you, we bomb them back. That's the local, kind of near-term activity of what's going on in the oil world. 20% of the world's oil is getting choked, except that the Saudis have an east-west pipeline across Saudi Arabia to the Red Sea. So instead of 8 million barrels going by tanker every day out of the Strait of Hormuz, 4.5, almost 5 million barrels are going to the Red Sea, where they load up on tankers and they go up through Suez or down through the bottom of the Red Sea. Although that too is now at risk. What's the rest of the world doing? Well, the rest of the world is saying, we've had enough of this crap. You've got Iraq going to Chevron saying, guys, let's start building pipelines from Iraq through Syria to the Mediterranean, get that oil out, get it away from the Strait of Hormuz. Doesn't mean somebody can't bomb the pipeline, but it does mean that the Strait of Hormuz is not the choke point. You got the UAE, the United Arab Emirates, saying, okay, we got this pipeline over the mountains, from, us to the coast of Oman. We have a deal with the Omanis, so we're going to pump a couple million barrels a day there. So we're going to be rerouting pipelines so that we can get it off the tankers. That doesn't do anything in the very near term. I mean, the Saudis have a pipeline, but they need more. The Iraqis have no pipeline, although there's an old pipeline that is part of the idea of what they're going to refurbish. The UAE has a pipeline over the mountains to Oman. Again, but you're in a war zone, so you got problems. The investor takeaway is that if you're going to invest in, oil and gas, energy, what have you, you definitely want to look for companies that are, outside of the Middle East and don't have that much, Hormuz exposure. For big name companies, Chevron and Exxon. I mean, you probably didn't come here to hear me talk about, the two of the biggest oil companies in the world, but they're big. They have deep pockets. They have capital. They have lots of other ideas. From West Texas to Guyana to offshore, the U.S. Gulf to offshore Brazil, offshore Africa. There's a lot of other oil and natural gas in the world. That has nothing to do with the Strait of Hormuz. So that's one aspect to it. Now that's the short term. The war problem. The war is going to end. I don't know when, where, how, but it's not going to drag on. This is the Iran war. It's not the Vietnam war. This isn't going to be a 10-year war. I mean, we can't do it. It's probably not going to be a 10-month war. I mean, it might be a 6-month war, from March to, as the summer unfolds, but something's going to resolve. But something that is not going to resolve is the underinvestment in the energy sector of the last 12, 14 years. I kind of remember when it fell off a cliff, which was in 2014, when the Saudis lowered the oil price really, really far because they wanted to kill off U.S. shale. That didn't work, but they did manage to knock oil prices down where they stayed relatively low for quite a while. I mean, they spike up on events and stuff, but then there's been this general sense in the world that fossil fuels, they're dirty and they're carbon and we want to be carbon neutral and you're a terminal industry, oil and gas, so the heck with you, and we're not going to invest in you, and we're not going to buy your stock, and we're not going to put you in our funds, and you're not invited to any of our fund conferences, and we shun you. We don't like you, bad carbon oil companies. You know what? Screw off, okay? I mean, I'm being really nice about it. Screw off. How stupid can you be? How freaking stupid can you be? 84% of the world's daily energy comes from combusting carbon. Okay, we put $2 trillion into alternatives in the last 20 years or so, and that the 84% is maybe like 82.5% or something. I mean, it's negligible. It's statistical noise. The world runs on oil, gas, coal. And that's just the way it is. I mean, don't be stupid. Okay. So looking forward, the oil industry in general is a very unappreciated industry. It is underbought by shareholders. It's under respected by many advanced governments. Look at the utterly lunatic, insane energy policies of countries that you would think would be smarter than this. Germany, for example. Britain. No drilling in the North Sea. Okay, great. Freeze to death in the dark. I mean, Britain is made for it. Canada, hello. I mean, now the good news about Canada is Alberta. I mean, you guys, that part's good, but that, the net, you got the net zero in Ottawa, and you got the oil sands in Calgary. And Canada exports 4 million barrels a day to the U.S. So thank you very much, Alberta. We appreciate that. We appreciate the Enbridge pipeline. So long term, the world's going to need hydrocarbons. But for the last 12 years, 14 years, we've been underinvesting in it. At the conference a couple weeks ago, Rick mentioned, he throws a number around, but I don't dispute it at all. That the global hydrocarbon sector, you might say, is underinvested by the amount of about $1 billion a day of exploration, drilling, development, exploitation, pipelining, et cetera, et cetera. It's $1 billion a day deficit times, 12 years. Do that math. It's trillions of dollars of underinvestment. So long term, when I say long term, 2 years, 3 years, 5 years, the war in Iran is going to end. Something else is going to happen. But in 3, 4, 5 years, people are going to be looking around saying, holy smokes, how did oil get so expensive? I'll tell you how it got expensive. It got expensive because a lot of projects just never got explored, developed, drilled, produced, pipelined, et cetera. So that's what I think about oil and gas.
Well, I think that's really important, again, highlighting that longer term picture, because with oil, I do see people thinking, well, is the moment over here? Did I miss that move in oil? But it goes back so far beyond what's going on with the Iran war. So I think that's pretty useful to get into.
If oil is a despised sector, the most despised segment of the despised sector is the offshore industry. It's the offshore drillers. It's the support companies for offshore drilling, and to the extent that service companies, the Schlumbergers, the Halliburtons, the BHIs, the Baker Hugheses of the world, that they support, this kind of stuff. I think that certain offshore companies are just, they're just picking up dollar bills off the ground here in terms of buying shares, And one company that I've recommended before, it's done really, really well, was Oceaneering, OII, Oceaneering International. They do a lot of offshore service work, everything from exploration to development to production to decommissioning, pipelining, all that stuff. Oceaneering, I think I recommended them at like $8 a share, and I think they're at like $40 or something now. But and they have a great looking chart. There's still room on the upside for Oceaneering, and then I guess Transocean, RIG, Transocean International Offshore. Again, how do you do offshore development? Well, let's see. How do you do offshore? You need rigs. Okay, who owns the rig? Transocean. So we could talk about it all day, but I think that's enough. That's enough.
It's very
give
helpful.
People some ideas here.
Yeah. Great ideas that people can pursue. And on the energy note, so we can leave oil there. I do want to go in the uranium direction for at least a little bit, because I think, we can see how much the world needs energy. Oil is certainly part of that, but uranium as well. And for that one, I sense frustration among investors, because it's, again, with a very positive long-term picture, but right now in the moment, maybe people feel like it's not doing very much. So what's your take on uranium right now?
Well, don't fall into the trap of thinking that that because it's not doing very well right now, you shouldn't be accumulating in it. The fact that it's not doing very well right now is a reason to accumulate in it. Again, you're in the Canadian Tire store and the loudspeaker says everything's 40% off. Oh, I'm going to leave. Goodbye. No, you're going to go over to the aisle that has uranium shares on it, and you're going to buy a bunch of uranium shares, put them in the shopping cart, wheel it to the front desk, and they're going to say, okay, they ring it up. That's 40% off. The one company that was at the Rick Rule's conference, the terrific company, is Uranium Energy Corporation, UEC. They're around, I think, right, I don't know, $8 a share or something right now. Probably cut in half in the last, few months, I guess. Why is that? Do they have any less uranium? No, they have more uranium. Do they have less ability to produce it? No, they're better. Can they process it? They're working on that too. Do they have did they have fewer deals and contracts out there with downstream users? No, they got more. They're doing better. I mean, their phone is ringing off the hook. Guys, what do you got for me? Let's talk. Where can we meet? I'll buy you lunch. I mean, this is what's going on in there. Just because temporarily the price is down, it's kind of, you want to buy when nobody likes it, because eventually somebody will like it. I told Scott Melby from UEC told me a funny story. I think I can say this. That couple of years ago, they bought on speculation big number of pounds of uranium from Cameco, CCJ, Cameco, the big uranium producer. That uranium was stored in drums, barrels, in a warehouse. Okay, so that uranium hasn't moved 1 inch. It hasn't moved not 1 millimeter since they bought it. And now, recently, Cameco is like, guys, we need some uranium to fill our contracts. Okay, we'll sell you back the uranium that we bought from you a few years ago for a big number, big delta, big profit for UEC. Again, I don't want to get into details. It's in their press releases, but that's really just smart management. That's really nimble, a nimble way to run your company, and they're doing it again and again and again. And UEC right now is the largest uranium player in the U.S. There are numerous other players in the U.S. who are, producers, semi-producers, smaller, all the way down to, wannabes. And, this guy has a huge deposit here and this guy has a huge deposit there. And, people, they're all, banging their drum over it. And I'm not taking anything away from them. I mean, I'm just saying, but UEC is probably the most, advanced or developed big uranium producer. And I don't want to take anything away from Energy Fuels either. UUUU, Energy Fuels down in Blanding, Utah. What I like about Energy Fuels, aside from their uranium and the vanadium side, because they produce vanadium along with the uranium, they have a circuit to do rare earth elements, and they were 4 or 5 years ahead of the time on that. And they're right now they're beginning the production process for rare earth elements out of that. And they're qualifying the system. They're debugging it. And you need feedstock, and they're looking for feedstock, and you need to run it through. You have to get your chemistry down. I mean, you don't just flip the stuff on and off like a light switch or something. It's not like you go to the car in the garage, turn the key, boom, the engine fires up and it works great. No, you have to get these systems up and running. It takes years to make it work, which is time we don't have. The best time to do these things was 20 years ago. The best time to do it, since you didn't do it 20 years ago, is you better start now. But uranium or Energy Fuels, I'm sorry, they're about, I'd say, 4 years ahead of the curve on that.
So sale prices in uranium as well. I think that's something for us to take note of. I think we're coming toward the end. We can start wrapping it up. But before I let you go, any final thoughts that you would leave investors with right now? Anything that's on your mind?
Well, I will say, I go back to that, you're in the Canadian Tire store and everything's on sale. Everything's on sale. And so you do have to do your work, I mean, you don't just sort of like throw darts at the board. Some people do that, but if I mention a company, if you have somebody on your broadcast here, it might tell you a really great story. But Joe and Susie, investor out there, do your own work here. Read up on it. Couple of things. Understand what it is you're buying. Get a feel for it. I'm a uranium company. Well, what does that mean? Like, where are you in the cycle? Like, physically, where are you? What are you? Who are you? Who are your people? Where understand the company. Follow the charts. I mean, if the chart's choppy, well, okay. Is it choppy in a consistent sort of way? Well, then buy it when it's down at the bottom of the chop. Watch the charts. Always use limit orders when you buy. You don't just buy it at the market, because you'll get it up here. They're market makers who definitely know how to do that. They know how to take your money off the table if you just put a buy it at the market in there. Be careful about chasing momentum. Don't confuse trends with your brilliance or your genius. If the tide is falling, okay, the tide's falling. I mean, if you're in it for the long term, you're going to ride it out. If you can't stand, if you can't stand a 10% loss, you're definitely not going to enjoy the 20% or the 30% downswing. But if you can ride it out, if you can sort of get back into it, in that sort of bottom segment, and don't think you're going to call the bottom, but just if you can catch it on the downswing, the long-term trends are your friends. And again, we're in this, they say 3.5% inflation world, but it's more, I use the number 10. You're going to lose half your purchasing power in 7 years. So protect your wealth with hard assets over time. And you want to be looking for income too. A lot of people want, how can I get some income out of this? Well, producing companies that do dividends, that's one way, and they typically increase the dividends. And then the royalty and streaming companies. I mean, and there are small ones, but the Franco-Nevadas of the world, the Wheaton precious metals of the world, guys like that. They have a lot of projects. So if something bad happens on one project, it won't kill them. You look at like Franco-Nevada. They have something like over 100 different operations out there that are sending them money. So if something bad happens over here, if they close down the copper mine in Panama, Cobre de Panama or whatever, closes down, it's not going to kill them. Okay, they're okay. A smaller one with only half a dozen or a dozen or whatever operations in their portfolio, that could hurt them if something bad happens. But yeah, so if you're new to the sector, some people are old hands at this and they're like, yeah, tell me something I don't know. But other people might be very, very new to this sector. It is an underappreciated sector. Mining in general. I mentioned energy. A despised sector. Terminal industry. You guys are going to go out of business in the next 10 years, and we'll be reading about you in history books. No, you won't. You're going to be buying gasoline. You're going to be buying plastic. You're going to be you're going to be heating your house with natural gas for a long, long time to come. So, however old you are, if you're in your 20s, 30s, 40s, 50s, 60s, 70s, I mean, inflation is going to rob you, like Willie Sutton robbed banks, man. So stay ahead of it. This is one sector to be in. It's not all, vaporwared up like the tech sector, the software sector, the chip sector. There's plenty to do in outer space. There's going to be a lot of money made in outer space. But I mean, we at Paradigm, we told our readers, do not buy into the SpaceX IPO, and it was a good advice because already the shares are below their IPO price. We're going to wait for the the inevitable swoon, but that's a whole nother aspect of what we do there at Paradigm. But so I guess that those are some of my takeaways.
Well, I think perfect spot to wrap it up. Thank you so much for coming on to go over what's happening in gold, energy. I think this was great and really useful for investors.
Well, that's what we want to do. If you're interested at all, paradigmpressgroup.com and, Paradigm, Paradigm Press, Google it or whatever. You'll find a landing page and you'll find your way in. On the more public side of things, we have a web, the Daily Reckoning. I write for that fairly commonly, at least once a week, sometimes more. And then there's another publication called The Rude Awakening, and again I write for that as well. And so it's all part of the Paradigm Group. But we have a lot of great newsletters. Both at the first kind of like we call them front end and back end newsletters. The front end is like the ones that have like 50,000, 80,000 subscribers, and those are, kind of big, very, very liquid stocks and everything else. The back ends are where you get these sort of much smaller ideas, little micro, smaller cap ideas, names that a little bit reluctant to name them just in a big public way because, if a whole lot of people just, decide they're all going to move into this one company on the same day, then boom, you blow up the share price and makes problems for everybody. So. But yeah, that's what we do.
Perfect. Well, I will add those links in the video description as well. All the information will be available for people. And yes, again, thank you very much. Once again, I'm Charlotte McLeod with investingnews.com, and this is Byron King.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.